we showed some trades last week in the gold and the week before also in the gold. This week we're going to show a trade that we did in the Russell 2000, which is a futures contract. In one of the main stock indexes, the symbol is ER2, and we did the March contract, so it was ER2H. Anyway, you can see by this chart that the market had a nice rally and actually made a high. It looked like it was double topping here, and then it started coming off. So we're going to move these forward bar by bar until we can establish a good trend from a high to a low. Once we establish a good trend from a high to a low, we'll put on our Fib cluster Quattro indicator to find out where resistance points are. Okay, we're coming back down. You can see now we've just traded under this yellow line, which we call our main 89 line, and that's the proxy for the long-term trend. The market continues under that line, tries to get back up above it, but continues down low. You can see the trend is still down. Finally, we make a 4-bar low on this bar right here, rather a 4-bar high. We generally don't run the clusters until we do a 4-bar high. It saves a little bit of work. Now we're going to run a trend line on our Fib cluster Quattro software from the high bar to the low bar, and this is going to give us resistance levels. Those resistance levels are where we want to actually short the market. We turn the indicator on, and we've got now 4 levels of resistance. Let's see what the market did. It came right back up to this level here. You can see it just traded right across it, and it came back down. Now the difference between that high, which was 716.70, and the low of 713.70, that's 3 points. That's equivalent to a $300 move per Russell contract. The market then continued back up and got to the second level. You notice that there's a couple of colored dots above the bar as it traded into that second level. And that's our squat bar, and that's an indication that the market is due for a trend reversal. And then the market had a huge break, made new lows. Every time you make new lows, you want to run new cluster levels, continue to make new lows until the close. And that's where the market, no, we still got a ways to go. Market came back up somewhat, trended sideways, and then actually went to new lows again, never getting above our main trend line. Therefore, the trend was still down. Now we'll fast forward this, and we'll see the market briefly got above the line and then came back down. Trend is still lower. Trend is still lower. And this is, you can see now we're breaking new lows again. And there's where the market closed. So you can see, if I back this up again, you can see that there were 2 very big trades off this trend, from this high to this low. First trade occurred right here at the lower resistance, and then at our important what we call SP level with the squat, and then it would trend basically down from there. Just to give you an idea, if you were to stay for the maximum of that entire trend down from a high of around 718 to the low of, let's see if we can catch where that low is, 683. So that's 34 points or $3,400 per contract at a maximum. Now, past performance can never be construed as an indication for future results, and there's high risk in trading futures. Anyway, that's an example of how accurate our cluster levels are, and we encourage you to visit our website at feargreed.com. That's www.feargreed.com. Check out our performance record there. If you have any questions, I can be called after the market closes at 480-393-0671. Again, I'm Bernie Mitchell. Take care and have a great day.